Hey, what's up, stock compounders? Brad here. So today I'm going to be talking about TIKR Terminal and the Global Equity Screener. Okay, now the Global Equity Screener was just released to all of TIKR users. Okay, before it was just in a special beta where it was only released to a select group of people to test it before they rolled it out to the whole population. So today I want to walk through how to calculate the magic formula globally using TIKR Terminal's Global Equity Screener. Okay, it's a very powerful tool. And of course, for those of you who follow the magic formula, you know Joel Greenblatt's screener at magicformulainvesting.com only covers US stocks. Okay. And above 50 million market cap at that. So now we have a tool where we can screen globally. We can look even smaller than 50 million market cap. There's just a lot more functionality that we have access to here. So let's dive in to how I set up my global magic formula screener in TIKR Terminal. And before I do that, TIKR Terminal is in beta right now. It's free. All you need is to be invited by someone who's already in TIKR Terminal. So I'm going to leave a link in the description. If you guys aren't already in, use that link and you can get in. Okay. So it's one of my favorite tools, especially for looking at stocks outside of the US. So let's dig into how I set up the screen. So you get into TIKR Terminal, you just click this global screener, and then what you do is you add different filters to the screen. Okay, so this first one is simply greater than 50 million US dollars market cap. And this is the same setting that the Magic Formula stock screener uses in the Magic Formula. So that's the same. We could make it smaller. I left it at 50 million minimum. Now the next one, this is one of two aspects of the magic formula. One is earnings yield. Okay, it's really a measure of how cheap a business is. The second one is return on invested capital, which is Greenblatt's measure of how good a business is. So this first one here, we're looking at how cheap the business is. We're going to use trailing total enterprise value, TEV, divided by EBIT, earnings before interest and taxes. This is going to be the last 12 months that I'm using of, this is really the acquirer's multiple. Okay, it's the inverse of earnings yield. Earnings yield, as Joel Greenblatt defines it, is earnings before interest and taxes over enterprise value. Okay, so just keep in mind that this is the inverse of that. So we're looking for trailing total enterprise value over EBIT greater than 0, but less than, I've defined it as 12 here. Okay, so an acquirer's multiple somewhere between 0 and 12. Now, Greenblatt does it a little bit differently. He doesn't kind of bookend the earnings yield. He just runs the earnings yield for all of the companies in the US, excluding financials, excluding utilities, over 50 million, and just gives those each a ranking from the best earnings yield, the highest earnings yield in this case, to the lowest. Because I can only work with, first of all, there's over 66,000 stocks that are accessible through TIKR Terminal. Okay, and what I found is if I have more than 1,500 results, I can't copy and paste the results into a separate spreadsheet. I can only look at 1,500. So what I did was I made these settings so that I would only get just shy of 1,500 results. That's sort of a nuance here. So anyway, you've got this acquirer's multiple between 0 and 12. And then this return on invested capital. okay? I set it for greater than 16. Originally, I had it for greater than 15%, but I was getting a few too many results from the screener. So I bumped it up to 16, and then, like magic, it dropped down below 1,500 results. Now, in terms of industries to exclude, like I said, Joel Greenblatt, in the little book that beats the market, which kind of laid out the magic formula, he excludes utilities and financials. And the reason for that is the way you would calculate how cheap or how good a utility or a financial services company is different than how you would calculate it in other industries. Okay, so that's why Joel Greenblatt excludes those. So what I did is I excluded a bunch of different industries that are within utilities or within financials. So you've got capital markets, banks, consumer finance, diversified financial services. You guys can read these. These really fit into the utilities and financials buckets here. So I excluded those, is not one of. I displayed the country, and yeah, that's it. So we can see the results here. 14 results. That's just over 2% of the entire universe of stocks that are built in to TIKR Terminal. So what you can see here, it actually sorts these by market cap, okay? So what I did was I copied all of these results into a separate spreadsheet. So let's jump right into that spreadsheet now. So there's 1,414 companies in here. The first step is to sort it by acquirer's multiple, okay, or the inverse of earnings yield. Acquirer's multiple, we want it to be low, right? If we're looking at earnings yield, the inverse, we want it to be high. That means the company is cheap on an enterprise value to earnings basis over the last 12 months. Keep in mind, this is just the last 12 months. Something could be very quirky about the last 12 months, which, think about what happened, what the last 12 months have been like in the world. There's been obviously a huge thing called the pandemic that has really fudged with, what could have been perceived as consistent, what's normal earnings or normal revenue for businesses, right? So the last 12 months, the last 15 months are going to be pretty wonky. So you want to keep that in mind. But regardless, we sorted this by acquirer's multiple, and then simply ordered them 1, 2, 3, 4, 5, all the way down to 14, based on how cheap they are, according to this acquirer's multiple metric. And you can see that's what's here, the cheap rank, okay? Next, I wanted to sort by return on invested capital over the last 12 months. That's the good rank, okay? How good is the business according to the return on invested capital? So sorted by ROIC, and then again, populated 1, 2, 3, 4, 5, all the way down to 14. And then I came up with the combined rank, all right? Simply the cheapness rank plus the goodness rank gives us the combined rank. And I simply sorted all of the results by the combined rank, okay? And this is effectively the magic formula applied on a global scale. So, you can see which industries are popping up in the top results for this global magic formula screen. Oil and gas and consumable fuels take the top 2 positions. There it is again. You can see which countries: Sweden, Canada, Taiwan, and where these things are trading in terms of acquirers multiple. It's pretty insane to be down around 1, right? Which basically means the earnings that this business brought in over the last year would pay us back if we bought the whole business based on the enterprise value. Okay, so acquires multiple of 1 or even less here. You probably want to dig into that a little bit. It's pretty special, and chances are there's some things happening below the hood that could be some serious red flags. But anyway, that's how the the Magic Formula screen is run. You can see where the market caps are falling for these businesses. The top one is just over that minimum 50 million threshold. You've got about a 2 billion company here. And there are some U.S. companies in the top 30. So we've got, let's see, the first one here is a biotech company, Ovid Therapeutics, 260 million. I mean, look at this, acquires multiple, it ranks second. I mean, earnings from 1 quarter would allow you, you'd make your money back in 1 quarter of earnings. So that's a little suspect. Return on invested capital, 52%. So some pretty compelling numbers there. And then you have Franklin Wireless out of the U.S. And then there was one, Nautilus, okay? Make workout equipment, exercise equipment. Very impressive on both an ROIC and acquirers multiple basis. So, and if you want to get the earnings yield, you just take, 1 over the acquirer's multiple to get the percentage earnings yield. So this would be what? It's not 33%. It's actually a little bit higher than that, 40%, somewhere between 33 and 40% earnings yield for Nautilus. So, and of course, you might look at Nautilus and think, well, yeah, of course they had a blockbuster year because nobody could go to the gym. So everyone was buying workout equipment, and maybe that whole thesis is blowing up now that things are opening back up. So, that's part of looking under the hood, is really understanding, is the last 12 months a freak outlier, or is this something we can lean on in terms of these different metrics here? So anyway, guys, I just wanted to show you how to put together a global Magic Formula screen using TIKR Terminal. I wanted to mention one other thing. Oh yeah, one thing that would be really awesome if TIKR Terminal would incorporate here is, if in this screen, they have this awesome thing here called Track Investing Gurus, where you can look up super investors and see what they hold in their portfolios based not just on 13F filings, but on all kinds of things, where you can also see their international holdings, right? They're outside of the U.S. holdings, which usually don't show up on 13F filings unless they're ADRs, unless they're foreign stocks that trade through U.S. exchanges. But in TIKR, we can see that. We can see what super investors own outside of the U.S. as well. So one thing that would be awesome to be able to incorporate into this Magic Formula screener is simply, a filter that says, do any of these investing gurus that are followed by TIKR Terminal own these companies, right? How awesome would that be? If I could look at these top 30 or top 50 global results in terms of Magic Formula and see a column here that just says yes or no. A guru that we follow owns this. That would be super valuable, at least to me, in terms of quickly filtering out which ones I want to look at first. Obviously, I'm a big fan of bowling with bumpers. I don't really even like to look at companies unless I know the tires have already been kicked by a very smart investor. A guru like Monish Pabrai or Warren Buffett or Charlie Munger, David Tepper, the list goes on, Li Lu. So that would be an awesome thing to be able to quickly screen for within TIKR Terminal. So I hope they include that functionality in the future. Anything else I wanted to cover? I think, oh, and of course, magic formula is one thing you could screen here. Acquirers multiple would be even easier, right? In the book Acquirers multiple, Tobias Carlisle kind of lays out the case that just buying cheap businesses versus buying businesses that are a combination of cheap and good actually slightly outperformed over time, according to his study, the magic formula. Okay, so a very easy way to run an acquirers multiple screen would just be to screen for this total enterprise value over EBIT over the last 12 months, and just completely forget about return on invested capital. One thing you want to make sure if you do that is you probably want to specify EBIT over 0, okay? Because it's possible you could have earnings that are negative and you could have an enterprise value that's negative. And that would give you a result, an acquirer's multiple result that would be positive. But it wouldn't be what you were looking for necessarily, something to have negative earnings. So you might specify, EBIT has to be above 0, enterprise value has to be above 0, that kind of thing. So you're only getting the results that you think you're getting. But that could be interesting as well, to look at an acquirer's multiple screen using TIKR Terminal. So yeah, I think that's all I've got, guys. Thanks for watching. Again, if you haven't gotten into TIKR Terminal yet, check it out. In the description, I've got a link just for you to get in there. I don't make any kind of affiliate fee if you guys sign up through my link, because it's free now, right? It's possible that I'll get a kickback later, depending on who stays on and continues to pay for the service after, they start charging for it. Who knows when that's going to be? It could be in a month. It could be years from now. I don't have any information about that. But in the meantime, I'm just finding it an incredible free resource for researching stocks, both in the U.S. and outside the U.S. And now that we have this screener, which is completely new to TIKR, it's just gone way up, even above where it was before in terms of how much value I get out of it. So anyway, guys, check that out. And with that, I will see you all in the next video. Take care.